Okay, great. Welcome everyone. Welcome to the web cargo freight update. We're going to look at current trends and market intelligence that helps us look at current trends. And a little later on, we'll also look at our FAX Pulse feature in terminal. I am Jude Levine. I'm head of research at Freightos Group, and I'm joined by Anton Barr, who is our SVP of data also at Freightos. As I said, I'm going to start us off with 10, 15 minutes of air cargo market update. And then I'll hand it over to Anton to talk about what's going on in terminal, including our FX Pulse feature. Okay, so in air cargo, in terms of the trade war and tariff impacts, the recent U.S. tariff increases on India, for example, are leading to reports of demand decreases out of India to the U.S. As shippers are pausing or some are canceling shipments as the tariffs are now at 50% and have been that way since late August. There are also reports of some demand increases and capacity increases as well out of alternatives like Bangladesh, as we're currently in this elevated tariff situation specifically for India. And there are other examples as well as of impacts of trade war leading to shifts in demand from different sourcing countries or from different regions. But we're seeing capacity changes too. So we've also seen a big increase in air cargo volumes, especially of electronics out of Vietnam, and there are resulting capacity increases there too. Not only to the US though, but also to Europe, as if we're seeing kind of shifts in manufacturing, then even if it's motivated by tariff considerations in terms of goods being shipped to the US, with manufacturing shifting there, we've also seen increases in shipments from those locations to other destinations, including Europe, for example. Alongside the tariff impact in terms of sourcing decisions impact for the air cargo market or air cargo flows, we've also seen changes related to de minimis changes. So the US ended the de minimis exemption for imports from all countries at the end of August, but they had closed it to just China starting back in early May. So the full closure that we've seen now for the last few weeks, this will likely further impact importers who've been relying on this exception for their businesses, usually SMBs. It's going to contribute to higher prices for many e-commerce shoppers as well. But in terms of the overall US-bound air cargo market, really the lion's share of the impact from de minimis changes or US de minimis changes have likely already been felt when de minimis was suspended for China. So according to US Customs and Border Protection, for example, in 2024, 3/4 of de minimis entries into the US were from China. The origins were from China. And since this exemption was closed to China in May, daily de minimis entries have dropped by something like 80% or more. The next two biggest countries of origin for de minimis entries to the US are Mexico and Canada, but those markets are mostly dependent on road transport, so it's less of an impact for the air cargo market. And there were reports of significant drops, some estimates as much as 50% drop in terms of China-US e-commerce air cargo volumes starting since May. But at the same time, the big Chinese e-commerce platforms have also shifted some of their focus and have started to really focus on some other markets, especially Europe, which is already the largest e-commerce market. And e-commerce imports to Europe have doubled in terms of value during the same period since May. So this shift may mean that globally, air cargo may not have felt a very sharp slowdown since de minimis change in May. And especially because a lot of that de minimis impact is already from China, we probably won't see big changes happening since August. Similarly to what we're seeing in ocean freight, which is interesting, we may have anticipated or expected that with these big changes, so for ocean, with all the front loading that happened earlier in the year, we're seeing lower volumes since August into the US. We may have thought that decrease on that market is going to be reflected as lower volumes, overall for the market, and that hasn't been the case. We've continued to see year-on-year growth or even month-on-month growth in ocean, and it seems like we're seeing something similar in air. So we might have thought that because of this big drop in e-commerce volumes from China to the US, that might have affected the market overall. But it seems that really similar to ocean, this doesn't seem to be the case. So here we're looking at the latest volume data or demand data from IATA, which only goes to July, and we see that volumes increased in July. They were up 6% year on year. And again, de minimis was suspended for China starting in early May. Year to date volumes through July were up 3% year on year. Earlier in the year, IATA had given projections that demand was going to be flat year on year for year totals for 2025 compared to last year, or we might even have a slight decrease this year for year totals compared to last year. But even with tariffs and the de minimis changes, it looks like so far there's been more resiliency than a lot of us had expected. In terms of July, some of this volume strength may have been from some tariff front loading due to deadlines that were pushed off to August. But it was probably more from that shift that we're talking about, this increase to other lanes, again, especially Asia, Europe. If we look at lane volumes, percent change, monthly lane volumes, percent change year on year, also from IATA, we see that Asia to North America has, in yellow, has been in negative territory for the last few months. Though interestingly, July was down only 1%, we see right here. And so that may point to a much stronger baseline this year. If we're comparing year to year, we know that volumes have been down for e-commerce for China to US. So for Asia, North America, that has been down. But we see that even so, we're only 1% lower than last year. So this probably points to a much higher kind of starting baseline, as we see many of the previous months were much higher year on year this year. So even with that, if we look at other lanes, we see that other lanes have had significant growth during this period, especially Asia, Europe, which is in blue here, led the pack with 13.5% year-on-year growth in July. Intra-Asia, if we look here, is also very strong. Some of this is probably shifting a focus of markets for Chinese e-commerce, like we said, to Europe, but also for other countries in Asia. But this could also represent some shift of manufacturing elsewhere because of tariffs that are impacting intra-Asia in terms of components moving within the region and things like that. So we're seeing knock-on effects of the trade war, but maybe surprisingly, overall, we're seeing volume strength. We're already, into September, and we don't have data since after July, but indications are that volumes have been reasonably strong. So we'll see how year totals pan out. But even with these trade war driven volume shifts, we're also seeing pretty quick and parallel shifts of capacity that have seemed to keep air cargo rates relatively stable. So if we finish now by looking at air cargo rates, we see that we've seen a lot of changes in volumes, as we mentioned, increases out of places like India earlier in the year until these sharp tariffs came in. Lower volumes out of India now, increases from Bangladesh, increases from places like Vietnam, decreases or e-commerce out of China. But overall, when we're looking at rates, we're seeing relative stability, which seems to point to the quick kind of rebalancing of capacity across the market. So if we start with looking at, now we're in our Freightos terminal, we're looking at our Freightos Air Index lane level data. So if we start with Southeast Asia to US and Europe, US at the top in the I don't know what color this is, darker brown, and here in the red, we see that rates climbed significantly in the second half of last year, and that could have reflected capacity shifts away from lanes like these to ex-China lanes because of the extreme e-commerce growth. But interestingly, after peak season, we saw that rates remained elevated, right, much higher than they were before peak season. And this is probably a mix of still lower capacity on this lane because of strong demand out of China, but also probably demand growth this year out of places like Vietnam, as we said, not just to the US, but also to Europe, and this reflecting those manufacturing shifts, but also more capacity being added, which is probably why we see rates level off later on. We did see some dip in rates to Europe in July, but they've recovered since then about back to the levels that we've seen for the last previous months. The latest rates are around about $5 from Southeast Asia to North America, and about $3.37 to Europe. If we look at South Asia, again to North America and to Europe, we see North America is on top and Europe is lower down. We see a big climb in early 2024. This was some ocean to air shift because of the Red Sea diversions. We see that higher rate levels were probably helped along by some sourcing shifts as well to places like India, when a lot of shippers were shifting to alternatives to China in anticipation of tariff hikes on China. In the last few weeks, we do see some softening um, for uh, for South Asia to the U.S., but still certainly not a collapse, even if we're seeing pretty significant decreases in demand, where things have been more stable to Europe, which would make sense if this is actually a tariff impact. And then finally, if we look at rates from China to North America and to Europe. We also see relative stability. So this was peak season last year. We saw pretty significant increases. We saw kind of seasonality, rates decrease later in the year into March. But really, since April, we had elevated rates, which could have pointed to, this last chance before de minimis changes. But even once de minimis was closed to China, we saw rates stay relatively level. And of course, most of e-commerce is going by freighters, but still, we didn't see that freighter capacity enter the spot market and push rates down. And we saw relative stability for Asia, Europe as well. And then even since de minimis has gone away, we're seeing rates really stay about in range that we've seen the last few months, which probably points to shifts in capacity if indeed we're seeing volumes decrease. With that, I'm going to hand off to Anton. As we saw, there's certainly a lot of volatility in the market and a lot of quick changes, especially with the trade war this year. But as we said even earlier with the Red Sea, and I think this points to a need for more real time and accessible visibility. And that's what Anton's going to share with us some of the latest from that we have on FAX and in terminal.
Hi everybody. Let me share my screen. I would like to show the different features around uh, this subject. So this is Freightos Terminal. We have number of dashboards, data dashboards here that includes Freightos Baltic Index, Freightos Air Index that Judith just spoke about, and the one that really stands out is the FX Pulse. So we just added this a few months ago. This is a new dashboard, and it's about four indexes: the FXD, S, B, and T, which stands for demand, supply, bookings, and tonnage. So the one at the bottoms, two indexes at the bottom are the indexes about how many bookings were made recently. And there is two ways to measure that, either in number of bookings or in tonnage. So we'll get to that. But first, let's see how we calculate these indexes. So first of all, there's a number of options to see them. You can either choose region to region lanes, and there's a number of origin regions and destination regions that you can choose from, or airport to region. So these are the options. There's no airport to airport yet. This is something that may be coming in the future. But for now, the most specific is probably the airport to region. And the one that I chose to show now is Amsterdam to US East Coast to United States East Coast. And so we're looking at 3 months. So let's look at the data and talk about the indexes and what they mean. So first of all, the demand index is measured as a change in number of searches in web cargo platform for this region. There's a number of routes, of course, here for all of them origin Amsterdam, but then in U.S. East Coast, there's many different airports. It could be like JFK and New York, of course, and some others, many others. And it's calculated from the number of searches that were made a week before, since we're looking at frequency weekly here. So it's calculated versus the week that just ended and the week before that. So what is the change? So let's see. The last week, the week 36, which started on September the 8th and ended September the 14th. There was a slight decrease, and the week before that, there was a bigger decrease in searches. It means that freight forwarders, about 5,000 freight forwarders that we have in the network, they they are slightly less interested in quoting and booking shipments on this trade lane. So there's a decrease. There was a decrease the week before of 10%, and now there's a decrease of 1%. And again, this is the number of searches that freight forwarders made versus the week before that. And obviously, we remove the searches, duplicated searches. If somebody falls asleep on the search button, then we don't count it as the same one. And these are unique searches for the same shipment for specific shipment on this trade lane. Supply index, on the other hand, is how many quotes were returned by the airlines as a result of these searches. So for all these searches, you can see like, okay, what happened? So let's look at the week of 10%. There was a decrease in 10% in interest in number of searches that freight forwarders made on this trade lane. And there was a similar, very correlated decrease in number of quotes, which is reasonable. Like people search less and there is less offers returned. So that is quite reasonable. Now, the last week is more interesting. Not something groundbreaking, but it's still more interesting. There was a very slight decrease, about 1% in the number of searches, but there was a larger decrease in the number of quotes. And sometimes it happens that there's a bigger discrepancy, and then it probably could mean like if the discrepancy was larger, it probably could mean that the prices are likely to go up because there's the same interest in the trade lane more or less versus the previous week, but there's less quotes. Less quotes probably means less capacity. That's the thing. So the fourth index is FXB, stands for bookings. So number of bookings, how that changed. So you can see that the week before that, the bookings, there was less interest and bookings quite in the same ratio, they decreased by 12%. And the last week, the interest was less by 1%, and the bookings decreased by 4%. So this is still correlated. This is the number of bookings, and the last one is the tonnage. So sometimes you have less bookings, but all of them are very large, for 3 tons or larger or something like this. So the shipped tonnage of goods is a different index, and you can see that actually in the last weeks there was less bookings, but it was more weight shipped. And it says something like if you take into account all this information, this is benign, doesn't mean a lot, maybe, but sometimes you have a discrepancy between the demand and supply, between the bookings and the tonnage, and then you can infer some additional information like what happens in the markets, and maybe the capacity is going down, maybe there is more bookings, more goods are being shipped, and then what you can expect as a result of that in the next week. Okay, so the last thing that we have here in Freightos Terminal is what we call key events. And these are the most important things that are happening in our industry and logistics in either ocean freight or air freight, air cargo. And it is specific to the geography that I'm looking at. So if I chose this particular trade lane, which is Amsterdam to US East, the key events are displayed for this particular trade lane. And we have a number of those. Some of them are ocean specific, maybe less relevant, like blank sailings, but some of them are more relevant to air freight, air cargo as well. So capacity trends, closure lockdowns, if there's a congestion in some airport, there's a certain strike in Amsterdam or anywhere, there's bad weather, like a storm or something like this, and any market changes, surcharge changes, etc. So we capture those events, we tag them by geography. So if I'm looking at Amsterdam to U.S. East Coast, then we tag it by the airline by the excuse me by the trade lane, by the corridor. And when people are looking at this air cargo corridor, we display only the relevant key events. So in this case, there is a number of congestion events. There's major airlines drop to performance of major airlines drop to 77%, whatever that means. And there's a link to the regional article in Lowstar and some other things like market changes and regulation policy changes and anything that is actually very important for logistic professionals. So this is what I call the morning coffee feature when you come in and just want to get updated because you hate to run into somebody in the kitchen that said, "Did you hear about it?" Yes, I heard. So yes, I know about anything that's related to my job, to the trade lanes that I'm responsible for. So this might be quite useful to complement the information of the indexes, the demand, supply, the volume, and the tonnage. And this is the main thing that I wanted to share with you guys.
Great. Um, Anton, thank you very much. I'm going to launch a quick poll before we go. Um, and once again, I want to thank all of you for attending. I'm sure we'll do another one of these relatively soon. I'll leave the poll up there for a minute so we can give you a chance to fill it out. But Anton, thank you very much. I know you weren't feeling your best today, so thank you for joining in any case, and thank you for all of you for joining. And we'll hope to see you next time.